Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Now, if you've been anywhere near the precious metal space over the last 2 decades, you've probably felt our next guest's fingerprints on it. And before gold was back in mainstream headlines, before central banks started quietly hoarding, before silver became a national security conversation, our guest was building the platform investors turned to when they wanted signal over noise. Joining me is from Prague, actually, is Peter Spina, CEO of GoldSeek, a market operator, a cycle reader, and someone who has not just watched this space evolve, but has actually shaped the conversation around it. Peter, it's so great to have you with us. Hello, hello.
Hi, Lyndsay. Thank you for having me on.
Now, let's not ease into this. Silver is suddenly being called a critical strategic essential to everything from electrification to defense, and industrial demand is surging. Supply growth, however, is not. Yet price action still feels almost polite, we'll say. So I have to ask bluntly here, is the market asleep at the wheel on silver right now, or is there something under the surface that investors are just still not fully pricing in?
I think it's starting to be recognized. Silver has had many years of this structural supply deficit where we haven't been able to satisfy this increasing demand, this record demand for many years, we're in the 6th year now. And the use of silver is obviously very broad, from electronic use to the green economy, but also it's very critical in national defense purposes. Well, now we're getting to a very interesting point where we have a lot of geopolitical problems. You have certain metals that are very important to the strategic national, interests of different countries. So, silver becomes part of the resource war, and it's been identified as a critical metal. It obviously is very critical in throughout the economic, and a modern civilization needs it to operate in modern society, but also to the national defense. And with supplies around the world getting very tight, obviously it's getting even more and more critical, the situation. So with the addition of silver to the U.S.'s critical metal list, we're starting to see more support and interest from the federal side. But this is something that's been building a long time. And it's a confluence at the same time of not just, its issue and its need for the defense industry and for the economy, but also the monetary side, which gold obviously is showing, wow, we have some issues on the fiat currency side, people running into gold, and silver has that dual use as a monetary metal and as industrial metal. So much is converging on it. We've got very tight inventories around the world for silver, and they're being drained. It's getting more and more critical that way. And I think the price is trying to recognize it. And like you said, there's not a lot of supply out there. The price has been so depressed that has it incentivized any serious exploration and development for many years. Silver price peaked in 2011. That was pretty brief. And we've been trading in, around the teens and the 20s. And you really needed a 25, 30 plus an ounce silver price to start to get the exploration side going. $50 plus really, really gets it going. If we have a price floor at $50 an ounce versus a sustained period like we're starting to see now, there's a huge influx of capital starting to enter this really small sector.
So when you step back and you call this moment the new gold order, that isn't subtle language, though. That sounds systematic. So when you say new gold order, are we already living through a monetary shift, do you think, that the public has not fully recognized yet? Or is this still maybe the calm before something much longer resets the rules?
I think in the West, it's been a bit of a stealth bull market. You don't see gold really discussed on the mainstream media. You hear crypto and AI and all sorts of things. But boy, gold has been running aggressively, and it's been returned as one of the premier reserve assets in the world. So it has replaced U.S. Treasuries as far as the central bank's holdings go. As the gold has overtaken U.S. Treasuries, and it's becoming really the go-to safe haven asset, the go-to safe haven premier currency. It is the place you go when trust breaks down among international trading partners, when the dollar is weaponized like it has been for years now. And even more so now, as in 2022 with the war in Ukraine, that kind of accelerated the timelines. A lot of fear came about, and a lot of buying came about from central banks and other places because of what happened. And now with Trump in power, the geopolitical situation adds another layer of demand for gold, because we have de-globalization. We have national interests coming more and more into play, and with what brought the dollar into such a power, its position has been its use as an international currency. You need it for as the globalization increases, so on. So as we de-globalize and we don't need as many dollars, and people are trying to even fight back against the dollar's dominance. Well, there's no really good fiat alternatives. The euro is trying to play its role a bit, but it's not really. It doesn't have the political cohesiveness. It has its economic and financial issues. And the Chinese yuan, they're trying to push it out there, but it's not quite at that point where it can really compete significantly against the dollar. So gold is the go-to unit of trust. It's the only one that's non-political. It's neutral. It's playing its historical role as money, as currency, and it's replacing treasuries in the dollar as the top held assets. So that trend is really working its way through. It is quite a statement. It's not being recognized in the West. They're recently starting to really wake up to it, and that's being reflected in the price.
It's one of the things that you did mention there is that it's being looked at quite differently now because there's no geopolitical risk around it, and every region seems to have their own rich gold resources there. And so what you're starting to see is a lot more countries now, they're hoarding their own in their own way, and it's not just used as a trade value anymore. That's looking at people are looking at our countries, looking at it like, this is ours and we need to keep this here for us instead because of all the different ways that gold is being used. Now, Peter, I want to flip over here and let's talk equities, because this is where it gets a little bit uncomfortable. Gold is strong, no doubt. Silver, however, it's tightening that strength, but many gold and silver stocks still look historically cheap on cash flow basis. So, Peter, what is the market discounting here? Is this one of those rare windows where fear is mispricing opportunity? Or maybe are there landmines in jurisdiction, cost inflation, maybe execution risk that investors are brushing off? What is it here?
Well, it's definitely amazing to see the lag in the gold and silver equities. And I believe first of all, it's a reflection of the West not understanding or recognizing that gold and silver in a bull market. They haven't really woken up to what's going on. But that's quickly changing as earnings come out and they see these huge profits and huge cash flow numbers coming out of these miners, beating growth of any other sector in Wall Street right now. But I think it's the fact that it's not been recognized, and there's also a fear that, well, this is maybe just a short-term move. Gold and silver, like silver in 2011, it spiked to $50 an ounce from the 2030s, and it came right back down. So there's a lot of fear like that's going to happen again. We're going to get trapped. We're going to buy, and then it's going to come back down. But I don't believe that's the case. This is a big secular gold bull and silver bull market, and we're seeing the longer the price holds up, the longer the more these averages, like the 200-day moving average, moves higher and higher in gold and silver. There's more confidence built, and of course, like I said before, the earnings are just hard to miss. There is some inflation on the cost side. We saw that a few years ago. It was running really high. We used to have several years ago, it was around $1,100-$1,200 an ounce, and $1,300 and $1,400, $1,500. And I see a lot of miners now around $2,000. They're all in sustaining costs. So it's holding pretty well right now on the cost side, but the price of gold and silver are running really nicely. So this is a very unique period where you have this profit, expansion. It's kind of like an accordion. The gold price goes up, and then it stays there, and then the profit margins get squeezed, and then the miners don't look so attractive, and then gold and silver run, and the miners are doing well again. So right now we're in an extremely profitable high. So much money is being made that these miners should be leading the gold and silver price. If gold goes up 100%, gold and silver stocks should be going up 300-400%. Most of the appreciation in the price right now is pure profit. So at $5,000 an ounce and $2,000 an ounce production cost, that's a huge margin. That is, it's getting recognized. So I think what's the theme from what I believe is happening right now, and my theme last year was silver is going to play catch up to the gold price. And we're seeing that taking place. It really has had a big time catch up. And now this year is a catch up phase for the gold and silver stocks. So in the past, gold and silver stocks used to lead the gold and silver price higher. This cycle, that's not the case. The gold and silver price they're pulling up the gold and silver stocks higher. So I think what I've seen a shift, especially in the last several weeks. There was actually one day where the silver price really got hit hard. The gold silver stocks had a quick sell off, and before the gold and silver price started rebounding, the gold and silver stocks started taking off. So it was like, okay, there's some big buyers, there's some big money coming into it. They've recognized that this a lot of these stocks, these miners should be up 2, 3, 4 times from where they are right now, and that's assuming that the gold and silver price hold where they are. And in my view, I think we've got another big leg coming ahead of us. So the opportunities in the gold and silver stocks are tremendous. The miners are traditionally run first, and then it trickles down to the smaller equities. There's going to be some big wins. We already had some companies do quite well, but I think we're still not at the mania phase where retail starts to go crazy and we go from undervaluation to overvaluation, and that's coming. I believe. I think that's still going to happen. So the opportunity, the risk to reward. Obviously, there's risk. The price, this bull market could end. Some things could settle the gold silver price. You have geopolitical unity. You have deficits erased. Things that are pushing the gold price higher start to ease. And it's not happening, but say that happens. I don't see a huge amount of downside, but the upside, the risk to reward, it's so appealing. So from an investment perspective, it's so hard to not want to be in this side of the sector. I had thought at these levels, I would be selling my gold and silver stock for physical and securing in physical because they had run so aggressively ahead of the metal prices. But actually, I've only sold a little bit. I sold a little bit of silver when it ran over $100 because I have a growing family. I need some money. I'm 100% basically in the markets. I'm not selling my gold and silver stocks yet. They're way too cheap. So that's how I see it. I think this year is going to be the revaluation phase, and we're underway right now. It's happening.
Absolutely. Well, it's a fascinating analogy that you put with the accordion, for one. Love that. I want to push it just a little bit further, though, Peter. We are watching central banks accumulate gold at record pace. Sovereign debt levels, they're ballooning, and currencies are quietly being questioned here. So let me ask you this. If the institutions that built that fiat system are aggressively hedging with gold, why are so many portfolio managers still treating precious metals as an optional trade instead of a core allocation? I mean, what are they seeing that retail is not? Or are they actually just simply late to a structural shift they cannot publicly acknowledge yet?
Yeah, they're late. I grew up in the United States. I went to university there, and I remember my professors mocking gold. Yeah, we had no education about precious metals. It's you have the dollar. Who cares? It's unbelievable the lack of education. You see that represented in the media. I think portfolio allocation is closer to 0% than 1% for most portfolios. Goldman Sachs said about private wealth. That's just absolutely ridiculous. So there's huge amount of room to grow. And you see, I know there's some billionaires out of Asia that just talked about them shifting their positions more into gold. You see it even in the U.S., some of the billionaires talking about it. So you see some of the big money talking about it. It's going to get other investors involved, and it's starting to happen. But boy, they're so far behind. And it's obviously it's quite the indication central banks are not trusting in their government, the fiat currencies, that they're running into gold, because they know what's coming ahead. They know that the risks are quite high. And what's backing these fiat currencies? Trust, and gold is a reflection of that. Gold is trust. Gold price is reflecting the lack of trust in fiat currencies. And there's a big risk. Obviously, we have huge issues. Nothing's been resolved since the last financial crisis or the other crises before then. They just papered it over, and as they say, they kick the can down the road. They have done nothing to fix things. They've made things worse. And we're at the point where things are breaking. They can't manage the debt or the interest on the debts at these levels. They're trying to suppress their interest rates, which just adds more demand to the gold price. So, boy, I don't know if we're going to go through a full out fiat currency collapse or reset, but I think we're getting a revaluation of the fiat currencies because they know that the only way to manage the debt is to devalue the fiat currencies. And they're trapped. So where are you going to go as an individual? You have to make your own decision. You have to protect yourself. The government's obviously bankrupt. They're not going to protect you. Our Social Security funds, we had $3+ trillion in cash in our U.S. Social Security system. They bought Treasuries with it. We are living off borrowed time, and if we go through another serious crisis, I don't know how they're going to really manage it. There's a lot of triggers out there. I just don't see a lot of bullish, a lot of good reason to be holding a lot of fiat currency right now.
Yeah, that makes sense. It's a wild time that we're in right now. And, back when we were younger, I don't know how old you are, but back when I was younger, you're right. Like currency held all that power. And now you look at it and you're like, maybe not so much. So it really is up to the investor to do their due diligence for sure and see what their own risk tolerance is. Now, Peter, we don't have much time left here. But I do actually want to, maybe, I don't know, I want to get into something personal about all of this. You have consistently pushed the idea of holding physical gold and silver, not just trading the paper versions. So in a world actually addicted to convenience and digital exposure, is owning physical metal actually about reclaiming financial control? And another question I guess I have about that, if someone watching this owns none, what does that say about their risk awareness right now?
Yeah, if the saying goes, if you don't hold it, you don't own it. And obviously, there's a lot of financial fraud, and we've seen it even in the gold sector and silver sector, where some people who own paper claims on gold or silver vaulted somewhere, it doesn't exist, or there's some, there's always a certain level of trust. You own gold and silver to protect yourself against extreme situations, and it's not very I think smart to have, buy all your gold and silver through derivatives, through paper representations, because it's still a claim on it, and you still have to trust the counterparty risk. So I think the most prudent thing to do is to have some physical in your hand. If you have no physical whatsoever, I think you're quite exposed to quite a bit of risk. History teaches us what can happen. You think things are okay, and you look around, it's amazing what we have today. There's a lot of abundance and there's a lot of good things happening, and I don't want to just harp on the negatives, but there's a difficult situation coming up. We have to resolve this debt. We have to resolve these imbalances. We've manipulated the free market system to such a degree where we've created all sorts of bubbles in the systems, not just we, but the central banks, the governments. So we're living on borrowed money, borrowed time. And I don't know how long this will take, another 5-10 years that before it fully resolves, or if they can somehow manage it. I don't believe so. I think looking just at how our government operates, there's no political will to really balance the budgets. There's no, people with democracy, they just want to vote themselves the best results, what's best in their own interests. And unfortunately, that's not going to end well. So it's from the history that I've seen from my own family who've gone through, through the communist era here in former Czechoslovakia, where everything was confiscated by the state. You have to take, you never know when that can happen. What was it in Canada? They shut off everyone's bank account that was involved in the protests, whether you agreed with it or not.
Yes.
That's a very dangerous situation. All
Very
of a sudden,
dangerous.
flip of a switch, and you're cut off from the system. You can't even go buy groceries. The communists didn't even do that back in the day. That was an extreme measure. So people who say that can't happen again, well, just look at what happened recently. Totalitarianism is very strong in the life.
Canada, it can happen anywhere. Peter, I'm so happy. This is exactly the kind of conversations investors need to be having. Thank you so much for joining us. And I honestly do come back because I think we can keep talking about this and really shed some more light on all of it. Thank you again.
I'd love to share that. Thank you very much for the time, Lyndsay. Thank you.
Again, that was Peter Spina, CEO of GoldSeek. You can follow their analysis and market insights at goldseek.com. If this is really a new gold order, then positioning is not about chasing headlines. It's about understanding power, policy, and psychology before they fully collide. And the investors who grasp that early tend to be the ones who write the next chapter. I'm Lyndsay Malchuk with Abaton Media. This has been your Market Frontlines. Stay tuned. There is more to come.